Good evening, ladies and gentlemen. This is Clueless Trading Frank. It's exactly 8:30 p.m. Eastern Standard Time on a very beautiful and warm New York City evening here on the waterfront of New Jersey. God bless you all. Full disclosure, this is purely for financial education, not for any solicitation or advice. It's 8:30 p.m. on August 29th, 2 days from the end of the month, which is August 31st. Just happens to be right before Labor Day weekend. And this is a strategic midweek webinar. As you all know, I do 2 to 3 webinars a week. Extremely powerful, extremely important to get you guys set on keeping an eye on the big picture, the small picture, the short term, the long term picture, the whole works. And we shall begin. This particular session and all other sessions are uploaded to the Clueless Trading YouTube channel. Feel free to tell all your friends, colleagues, family, dogs, cats, whatever you own or harbor in your house to listen to it. Very important because these are free webinars available to anyone out there to understand the reality of the markets, not, as I like to keep saying, not the fake and all the garbage stuff that you guys hear from the media, financial media. Secondly, I've been saying this over and over again, and many of you have, some of you haven't, and I'll be taking some pretty measures to correct that soon. You need to follow the Clueless Trading Instagram channel. You don't have an Instagram account, just create one and just follow. That's it. There's a lot of great content there, put out there, highlights of our trades, different things that go on, so you can see whether you missed it or not. It's just a great medium. It's for exposure, and I think that's the least that I can ask all of you to follow and have all your friends and family and colleagues to follow. We are also present on Facebook, LinkedIn, and those are not as regularly updated as the Instagram channel. Okay, so let me start. What you see behind you is the bigger picture of the market. And let me make a couple of broad points here, all right? Keep this short. Bull markets, bear markets, they have one very common characteristics. Retail human investors, such as all of us, more so all of you, because I'm more robotic than most people when it comes to trading. Bull and bear markets have the same characteristic. They confuse the heck out of you. Bull markets tend to move in. Bull markets tend to. 1 second. Why can I get my pen here? Interesting. 1 second. I can't get my drawing pen here. Okay, great. Bull markets tend to move, as you can see, in staggered fashion. That's the normal bar word. They move in patterns and they make cup and handles, bull flags. They keep on moving higher. Bear markets basically
Frank, I'm sorry to interrupt you. It's me, Lisa. Hi, how you doing? I just wanted you to know you're not sharing your screen yet. Nobody can see it. Just a heads up. Thanks.
Oh, Lisa, thank you. And surprising that no one said that either. Thank you, Lisa. Okay, does everyone see my screen? Thank you, Lisa.
Looks good.
Thank you. All right, so let me just start.
Yes.
One of the biggest characteristics of bull and bear markets, and please listen carefully, is that the risks, the dangers, the confusion, the mental trepidation, the SOA sitting on the bunkers, the diapers and everything are exactly the same. You miss big moves in bull markets and you basically get completely decimated in bear markets. In other words, they have the same factor. The retail investor tends to just sit there and do nothing. Or if they do something, they do it in very small ways, whether it be on the short side or the long side. Guys, we are in a major bull market. We have been in a major bull market with intermediate corrections going all the way back from March 9, 2009, when I was sitting at my desk on Wall Street. I left Wall Street at the end of 2010. There was a correction in 2011. There was a correction in 2012. There was a correction in 2014. There was a correction in 2015 and 16. There was a correction in 2017 and as recently as 2018. In all cases, the retail investor chasing prices, just looking at things, it's been completely wrong. What I'm getting at is very simple, and I hope you all understand this because I'm trying to help everybody understand the behavioral dynamics of the market. Bull markets are equally dangerous because you do not take trades, or if you take trades, you sell on every little red candle. These are daily candles. These are 100, 200 point drops on the Dow Jones. These are 7-point drops on Boeing. To give you an example. And the risk in bull markets is you sit aside. The risk, I'm going to put bull market, and please, I'm saying these things very seriously, so don't waste my time. That's serious. Okay? The risk in bull markets, you are sitting on your what? I'm not going to say the A word, okay? On your A. You are terrified of heights, which I keep on saying, and I don't say that as a matter of late night humor. This is called mental calibration, guys. This is what makes the big money. And every night going back and saying, oh man, I missed that. I'm sure I'm going to get it next time. There is never going to be a next time because you're going to keep on doing the same thing over and over again. It's called insanity. And if you don't get pissed at yourself for missing major, huge trades, swing trades that I posted from weeks ago, and I don't always have to update them. They've been posted. Just stick with them. Whether it be Square, whether it be Amazon, whether it be Google. And if you don't get pissed at yourself when you go to bed for not making thousands and thousands of dollars sometimes in a day, and more so in a week, then there is something wrong with you. That means you are certainly not a performance trader. You just want to make the pennies. And if that's the case, don't bother trading because the market will swipe you out in a few minutes. And you know we have gone through that. They just take everything away from you. And they're going to start the grind again. These are major moves, guys. What's happening in the market is significant. We have a little bit more room to go. Maybe a lot more room to go. And that's what's on these charts. So if you're SOA terrified, sitting on you know what, on your behind, and bunkerized every time the market falls 60 points on the Dow Jones, and your stocks are down 2 or 3 points, nothing technically changed, you're not going to get anywhere. You're just spinning the wheels. And you're going to send me text saying, well, yeah, I did okay. You know what I did okay means on the Oprah show and Dr. Phil and at Clueless A Trading? You did nothing. You did nothing. Bear with me 1 second. My lovely wife is calling me. You take everything serious. This is a new headset. I got to find the mute button. Are you guys there? My wife actually said sorry. I'm doing a webinar. I'm like, what? She said sorry? Oh my God. That's a classic. Listen, guys. So, honestly speaking, there's a major stuff going on. Now, so what I meant to basically say, I don't want to keep on going on, is bull and bear markets are exactly the same. They are equally terrifying. In bull markets, You're missing major 3, 4, 500% moves in a matter of days. Okay? And in a bear market, you're basically losing whatever you can lose, because an option, you can only go down 100%, right? You can't go down 300% on buying a $6 option call, right? So you're losing money 100% of whatever you put down, of your option trading capital. And you're missing 300 to 400%, a lot more in some cases. Now, I don't know what other services talk about, and say it's not my business. I'm just a clueless, simple guy who basically looks at life and trading the same way. When you miss huge opportunities, which can make you on the trading side truly wealthy, not like, oh, I just made $2,000, I'm really excited. Making 20,000, 30,000, 40,000, 50,000 bucks on a trading capital of 4, 5, 6, 7, 8,000, or taking a $2,000 account into 15, 20,000 bucks in a matter of weeks. And it doesn't take the excuses, oh, I'm too busy, my job is taking that away. Forget that garbage. You want to make an excuse, or you want to make a profit? Because honestly speaking, you can sit with a swing trade, not watch the screens, and just let it go. What's going to happen? We're just going to crash and burn? Yes, we'll have quick tactical pullbacks during the day. What is this chart telling you? I keep on saying this to wake everyone up. A child can read this chart. A child can look at this chart. It's a Legoland chart, which, by the way, is opening up in Goshen, New York, 90 minutes from, New York City this summer. Okay, Legoland. This is a Legoland chart, guys. You guys are grown people. 30, 40, 50 years old. And you're shit scared, excuse my French, every single minute of the day. You don't want to take the earnings trades. You don't want to buy the basket. You don't want to buy one call, two calls. 1 and 2 calls can make a $2,000 account go to 15,000, 16, 20,000. And one day, I have a beta account that I want to show, because I only did it just to prove that small accounts can get big. And that account could have been a lot higher if I just stuck with some of the trades. If I just put the whole crap goddamn 2,000 bucks into Apple, it would be $40,000 right now based on my charts. Honestly. Why am I saying honestly? I mean, look at my Apple chart. There. All the way down from the earnings where we said buy Apple. Right there. You could have bought $2 in here, it would be probably 100, close to 80 bucks here. That's serious. So guys, sometimes you have to revert back being a child. Stop overthinking. Stop overanalyzing. Stop looking at like, oh my God, 100 indicators, and this almanac said that, and that almanac said that, blah, 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 blah. Just look at what's going on. Now, am I uber bullish? No. Going back to the original chart that I was showing you, this lightning zone, which was actually down here, just in case no one knows what an icon for a lightning looks like, this lightning zone is now moving up. And we're probably, who knows, we're going to hit this level pretty fast, 29.35, right around the corner. Do you see any major distance from here to where we are? Look at the SPX calls expiring today. Look at the ones expiring next week. They're up 318%. The 2905 calls, 2910 calls that I said buy. Because I said buy 8/31 and then August 31st, and then I said buy September 7th. The ones expiring on Friday, the 2905s, are up 318% just today. And from the time that I alerted them, they're probably up 600%. I wish I had the manpower for everyone to put all of my trades, losers and winners. And you tell me, I'm not doing my job. Because you guys are certainly not doing your job. You're walking the walk of shame by making a little money and putting away the big money because you're doing stupid things by just ramping out all the time. I mean, selling out all the time, not following my charts, using some frigging almanac and whatever the heck that's out there, and saying, oh, that's what's going to happen. There's a lot of guys, buying. Look at the concentration on this. This what is it? The sweeps. They're buying so many puts in there. Come on. If the sweepers were that smart, they'd be running $30 billion hedge funds making 120% a year. Do you know what hedge funds are doing? They are down on average by a negative 5% for the year as the market is up in the double digits. And Clueless Trading overall portfolio performance is up more than 300% for the year, net. So many smart guys out there on stock twits and everywhere. Look, I'm not the smartest guy in the world. In fact, I'm a goddamn idiot. And maybe that's what makes me strong. Because I never think I'm that smart. What I'm really smart at is forecasting markets and drawing these charts that can make you guys a lot of money. And some of you, by the way, are making a lot of money. And a lot of you who think they're so smart, with so much baggage in their head, are making less than nothing. And that's a tragedy. So, just want to lay it down, guys. Don't like it? Go away. Now, let's talk about the good stuff. The good stuff is none of us are reaching our potential. None of us are catching the potential of each of these very powerful moves. I'm doing really well, but am I living up to my own performance goals? Nope. Nope, I'm not. Because what keeps us, and you guys more so, because most of you are MOHTR, that's called monkeys on a hot tin roof, looking at every tick, selling out too fast, not buying tactical lows, making excuses to yourself, which none of them I do, by the way. I don't make excuses to myself. I get angry at myself. I don't justify my failings. Many of you justify your failings. Oh, I'm too busy. Yeah, I couldn't do that. Blah, 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 blah. Is that the way great institutions, great traders are born? I don't think so. So cut that stuff out. That's serious, all right? So on the front that, are we all reaching our potential? No. You guys are certainly not. You guys could do a lot more. Some of you are trading with monies which can make you huge money, and you're not. Am I reaching my potential? No. I'm running at maybe 60% of my potential. I should be running at 80%, 90%. Well, 90% is way too high. That means being like absolutely like, oh my God, I'm dead right. I'm going to put 90% of my capital in there. I never do that. Now, why do you think that is happening? No, stay focused is not the answer, Lisa. No. It's not stay focused. Okay? It's called mental grit. It's called mental grit. You got to take positions enough so that if a stock moves from, like Square, moves from 80 to 86 bucks just in the last 2 days, you have enough of a position size to make 2, 3, 4, 5, 6,000 bucks. That's not called focus. That's called getting into position sizing, mental grit. Everybody, a lot of you guys are focused. And if you're focusing that much, why aren't you making like FU money based on my alerts? So with all due respect, and you're a great person, Lisa, okay? Focus doesn't do the job. So let me ask you a question, all of you, and I need some responses or else I'm going to cut this webinar out. Why do you think that we don't reach our full potential aside from the behavioral part? What does the market do when we know it's going to do that overall? We know the market overall is going to get to that 2760, 2740 level. What keeps us from keeping, and that includes all of us, from maintaining our initial positions, our added positions, and just going with it despite intraday volatility and stuff? What keeps us from doing that? What does the market do for us to mismanage our positions? There's only one word for it. Lisa. Answer. Okay.
Your emotions.
Okay. I just told you, besides the behavioral part, listen to what I say because I speak very good English. Okay? Listen to my question. This is a SAT question. This is a GMAT question. This is a Harvard Business School question. What does the market do for us to mismanage our position? DC Trader, please answer. Does anyone hear me? Am I talking to a wall? Lisa, you refuse to answer the question?
I can just say it tries to fake you out, like you think it's going to do one thing and it does another.
So you're close. Yes, you're getting there. Why? How does the market fake us out? Get to that one word.
When we had that really bad day, Wednesday, a week or two ago.
Lisa, don't give me a long-winded story. You have to answer. Really bad day. We have what bad day? We have bad days. We turn out into huge days. Get to that one word that creates massive mismanagement of trades.
Yeah, they lost us.
What?
My dad's here with me. Sorry, Frank. All right.
Who is?
My dad. My dad's here with me.
Yes. Hi. How are you, sir?
I'm fine, sir.
Thank you. It's great
You're fascinating.
that you're sitting there. I'm not fascinating. I'm just a very, straightforward guy. Lisa's actually given the answer, and nobody has volunteered to put that one word in the picture. Scotty, what are you doing? Just looking at the screen and saying, when's my next beer coming? I mean, come on. Seriously, guys, get involved in this webinar. Scott, can you hear me? Okay. DC Trader won't answer.
Would it be fear?
Oh my God! I just said it like 9 times, guys. You guys would. First of all, you guys would never get into Harvard Business School or Stanford. I just said repeatedly. It has not. It is. I'm not talking about the answer I'm looking for. It's nothing to do with mental behavioral patterns. What is the technical stuff that happens in the market that causes mismanagement of all your trades and takes away your ability because of fear and all that stuff it creates? I can't believe that we have real traders trading with real money and nobody can answer the one word answer. Oh my Lord. No wonder the Chinese, the Japanese, the Indians, and whoever's out there beating the crap out of us. Make America Great is definitely not this webinar. I swear to God. It's called volatility. And Lisa had the answer, just she didn't have the word. It's called volatility. Volatility created by algorithmic high-frequency trading, black boxes, is what creates the mismanagement in our trades. Every single one of my trades, overall, okay? I would not say every single. I shouldn't go that far. But I would say 70-80% of my trades, if not more, have gone exactly to what I said they would go. But what has basically caused the mismanagement of positions, swing or day trading, has been volatility. Guys, don't you guys get it? And volatility is created by machines, by hedge funds day trading, by the talking heads on TV, and of course your fear, your baggage, your mind, and all kinds of stuff. Volatility is uncertainty. And that has what kept your account from going from a couple of $1,000 into the 6 figures. And you all know it. Whether it be Align Technology all the way from the 200s up to 420, I mean $400 almost. Whether it be Square, buying like crazy, not in the 20s, we were buying at 40s, and traders in the group saying, I have to say it, which is a good friend of mine, JP saying, I really like the Square, it's like, who the heck cares what you like? These are the best of the best U.S. corporations. I don't even use Square. I use PayPal. And look at the stock now going straight to 90, and it's going to go to 100. Believe me, it will. And these minor volatility, and this is a weekly chart, so these are weekly pullbacks from 72 down to 63. Like, oh my God, the world's ending. Well, all it did was simply stay within the uptrend channel. That's what's going on. One of the best stock twits guys that I actually look at, and I'll give him a shout out. What's his name? Cookie something. Cookie Monster, right? That's his name. And I'm trying to look him up. Yeah, Cookie something. And he's got a picture of a Cookie M, he goes by. And he plays pivots, channels, and stuff. And I said, you know what? This guy actually makes sense. The rest of them are garbage. The rest of the people that you follow are garbage. Dead serious. Why am I so passionate? Because I want to help everybody make real money. Instead of being stupid 90% of the time and 10% of the time making some money. And then giving a whole bag full of excuses. The United States of America is the greatest nation in the world. And believe me when I tell you, because I have traveled extensively. And I've lived abroad extensively too. Despite all our faults, all our mismanagement, all the garbage that we deal with in politics, we are the best. But it wasn't built on sheep and lemmings. It was built on risk. So for God's sakes, instead of just waving a cheap flag and screaming slogans, act on what built this America great. Act on your portfolio. So this guy, Cookie M, he talks about pivots. Talk about pivots all the time. It's all about channels and pivots. That's it. That's it. If the channels break, short the market. I'm talking about the wider channels. Okay? So in the case of Square, if the channel breaks all the way down here at 70, fine, short it all the way down to 60. A child can tell you that this very large bullish engulfing candle is going to kiss 90. So I put out the alerts all the way through, revisited again today, because I always had swing things. I told you guys months ago, the Square is going a lot higher. Now, when you look at the bigger picture on the weekly, these are all consolidation channels. Does this look like a chart? So you can know how much money you can make just by putting a decent sum of money from here to 90, just within the next week or maybe by Friday, for all I know. That's serious. So that's what you guys got to do. Whether it be Align Technology that we've been trading all the way down from the 200s, I'm never going to lie and say, oh, yeah, I held it all the way from 200 to 370. No, I took staggered profits along the way, got in, bought them at the bottom end of this range. Now this is a daily. Bottom of the range was 331. Telling people to buy it again because it went up nicely, took some profits, added some more. What does it look like? It's going to just crash and burn because everybody just rips out their Invisalign from their their mouth and said, "That's it, it's all over." Or somebody gets cancer from wearing Invisalign braces. That's what Align Technology. That's the main product, right? They're going to get bought out. They're going to get bought out by one of the big medical device companies at some point. But initially, overall, you still got room to move up to that 400, 410 range. We bought the 410 calls, and they even moved up 60% in 24 hours. on the alert from yesterday. I didn't hear anybody get that excited about it. So what I'm getting at, guys, is this, because I don't want to keep going on and on, okay? The content that I'm delivering is really serious stuff. And don't squander it, guys. Don't squander it, okay? Do whatever you need. Use your gut feelings, whatever your opinion stuff. It doesn't matter. My opinion, your opinion, our dogs and cats. We have a lot of rescue cats and dogs, right? It doesn't matter. What really matters is tactical charts. Follow the channels. Follow the resistances and supports. Follow the internals. And believe in the fact we're on a major move. Now, the major move is not going to go on forever, but behaviorally speaking, what's happening right now, in my opinion, like that happened back on January, mom and pop suddenly waking up and said, "Oh my God, I'm missing everything." Because there was $17 billion of outflows out of mutual funds, not taken out of mutual funds, but from the growth funds, which invest in stocks, into money market accounts in the months of July. Everybody's like, oh my God, Turkey's going to kill us. They can't even find Turkey on a map. I've been to Turkey. It's a beautiful country. It's just like Greece. Okay? Like, oh, Turkey, Turkey's going to kill us. You ask an investor or a trader, what does an emerging market really mean? What does currency fluctuations, how does it affect the United States of America? They couldn't answer you. They're like, oh, it just broke the 10-day moving average, blah, 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 blah. Traders are the stupidest when it comes to understanding macroeconomics. Most traders. Okay? And it's good to know that. And that's why I try to explain it as much as I can in my webinars and stuff. The Turkey contagion was serious and it was spreading. But as long as it doesn't spread to major, larger emerging markets like the Philippines, like Thailand, like even China, Australia, non-emerging market, developed market, but still, then it's going to be fine. So here's the range. Real simple. 29.22, which is just around the corner. I'm just going by the Bollingers. Okay? That's how I draw these charts. Very easy to see. And the lower end, 28.95. Futures right now are 0. How do you like that? Flat. In the meantime, we got a lot of selective trades going on. And lots of huge winners. Some losers too, especially on the earnings play. The earnings play, here's a quick thing with you guys, all right? You do the basket of earnings, please. One contract, two contract, whatever you want to do. I'm not here to tell you what you need to do. Okay? The ones that don't work pretty much and have no reversal patterns coming up, I'm not alerting. Just dump it. You buy one contract at two contracts at, let's say, $3, and you lose that's $600, and you lose 300 of that. Get out. The ones that are running, like yesterday, for example, we had huge movers on Tillery, which was intraday mover too. That the pot company, cannabis company, huge. Stock went to 49. I actually bought common at 51 plus. The freaking thing went to 62. The calls were up 120%. They went from 550 to 1150. How about just buying one, like I kept on saying? How about buying 10 shares? No, I don't do earnings. It's too dangerous. Yeah, so is risking anything in the market. Ask a real estate guy what's really dangerous. Say, the stock market's really dangerous. And options trading, oh, that's pure gambling. Oh, yeah, sure. Keep on having that mentality, guys. You guys are not going to get anywhere. I said this today earlier on. One of the fastest ways to grow small accounts, aside from taking these small lotto trades, which get big, is to buy a small amount of money allocated from your small trading capital into earnings. You wake up the next morning, that $2 call is at 9. Shoe Carnival. Or Tillery, for example, that goes from 550 to 1150. And then Dick's Sporting Goods, which went the other way, a $2.50 call went to 17 cents. And then what did it do? It turns around and goes up to 60 plus cents. So all of a sudden I'm hugely profitable because I bought them at 10, 15 cents. So guys, here's the point here. As a trader, you gotta be flexible. This is not your almanac market. This ain't your grandpa's market. With all due respect to all grandpas. I've lost my parents a long time ago. I don't have my grandpa anymore and I miss them all. But with all due respect, this ain't no frigging legacy traditional woodworking market, okay? This is a digital market running on hyperspeed. And if you don't adapt to it, you're finished. You're finished in two ways. One, you're going to lose a lot of money. Two, you're not going to make enough. You're going to make very little pennies on monster moves that I'm delivering and your ideas too. And eventually, you're just going to get really frustrated. So don't become that. And I repeat again, I'm no genius, but I am a damn good forecaster of the markets and understanding a lot of things, guys, you guys wouldn't even understand. Whether it be politics, whether it be business stuff, whether it be my good old friend Donald. Okay? That's serious. Those are my strengths. So, look at this real carefully. And does this look like a bear market? I've asked that many times before. Look at charts. I don't have a lot of charts out today. Look at stuff like this. Look at stuff like this. Look at stuff like this. This is Apple breaking out. This is Apple, us buying. These arrows weren't put there after the fact. They were put there before it happened. So whether I'm pushing Apple every day or not, screenshot these charts. Construct them yourself. It's investing.com. For God's sake, it's free. And many of you just love free things because everyone wants to wave a flag, but they all like free money called welfare. So it's free. So go get it. Use it. Now, somebody says, oh, Apple's overall just done. Look at that. It's on the upper end of the channel. No, it's not. Because if you look at the, I put my chart up there with the connotations. If you look at the 361.8 Fibonacci level, it is 229.83. The stock will go to 230, high probability. Remember what we do in trading, guys. We don't go for certainties. Remember what Warren Buffett said. You pay a very high price for certainty. Can anyone tell me what that means? Please. What does you pay a very high price for certainty? What does it mean? As traders, you all should know what that means. Anybody, please step forward. What does you pay a very high price for certainty? I didn't say that. The most successful American business person said that. One of the most successful, Mr. Warren Buffett. You pay a very high price for certainty. What does it mean? I love this fact. Everyone goes silent. What does it mean, guys?
It means you're not afraid to pay up for something.
Bullshit. Completely wrong. Okay, DC trader. It's just the opposite, Lisa.
Yeah.
But I'll explain it. Yeah,
Frank, can you hear me?
I can hear you, sir. And who is this?
Yeah, this is Walter.
Yeah, go ahead. What does
a
very high price for certainty? What does it mean in trading and in life? What does it mean?
It means you're going to get a lot less as far as a return if you want certainty, and you're also going to pay a lot to have that safety factor put in there.
Thank you. Thank you so much. And Walter, I got to put my hats off to you, man. You read my, not read my mind. These are standard stuff. Okay? So let me explain to everybody what it means in trading and investing, aka Warren Buffett. And if you understand this part, you're going to make yourself one heck of a trader. I can tell you that any day, or one heck of an investor. God bless the USA. because the United States was built on risk, not on certainty. All the way from the 1700s and the 1600s. You pay a high price for certainty. Let me explain to you guys in simple English what that means, all right? But first I got to write that with my mouse. I still have to find a some sort of tablet device that I can write things on. Price for certainty. Okay, so listen carefully. It simply means, like Walter said, and I'm going to explain in my own words, by the time the news is already out, everybody knows it's a sure thing, the stock is already up here. That's what it means. That's what Mr. Buffett meant. By the time everybody knows it's a certainty. Now, that's a bigger picture, of course. Okay, but still, the stock has fully incorporated that price, and it's up there. The price of uncertainty is to follow these charts and follow these channels and buy the stock at 192, 196 and just follow it all the way up. Now it's almost certain that it's going to go to 230. Okay, maybe it does, maybe it doesn't. But the real money was made here like we did. So in the case of a stock or the markets, if you know, and if you know, that means a lot of other people know, that it is definitively going to happen, then get ready to pay a very bloated premium, i.e. high valuation for that bloated premium for that particular asset. If everybody knows that a certain neighborhood is going to explode in price because they're building a highway next to it, or they're building a Costco or a Walmart next to it, and when that open land was nothing but just like a landfill, that's when the time to buy. Not when everybody knows and your local newspaper is saying, hey, that's a great place to buy. Yeah, you're going to make a little bit of money. So you pay bloated prices by the time it's certain. So guys, what we do at Clueless A Trading, I'm going to end on this note, okay? That's serious. And listen carefully. What we do at Clueless A Trading is we tend to buy tactical lows, and you know that's a fact. I can't run away from it. Just scroll through my Twitter feed. We're not into fake news and fake things. We buy tactical lows, we buy consolidations, and then we run with the wind. We run with the wind, okay? Because we buy a level of uncertainty with a high probability that it's going to be certain based on technical charts that I produce. So if you're waiting for safety, oh, I don't invest in a biotech, oh, I don't do earnings numbers, oh, I don't buy that stock because I don't know that name, then you're the crappiest trader in the world. Because a name means nothing. What does a name give you? We bought the CRM. Everyone's like, whoa, it's so excited. So I bought a small amount in my earnings basket. The frigging thing is down 3%. Can it bounce tomorrow? Sure. So everyone's certain that, oh, Salesforce is going to do, Mike Benioff is definitely going to be the king of the cloud. Because everybody was so certain. But we just didn't want to play it, so it's fine. Certainty doesn't pay the bills. Certainty makes you a little money or makes you lose money. You got to take the tactical risk. It's called quantifiable risk. On that note, guys, you guys are great. I just want to explain a bunch of things which are going to be extremely powerful in your trading mental calibration. The market still has room to move higher. Will the market correct? Absolutely. And if you listen to those beautiful climactic Armageddon preachers that many of you follow, like, oh, now we're just going to completely crash and burn, not happening. Not happening. Can a black swan event happen like this? Absolutely. Was this a huge buying opportunity? These ones? Absolutely. talking about Armageddon like I see on stock tweets and other trading forums sometimes, because I monitor quite a few of them. Oh, we're just going to drop art, and oh, it's just going to happen. No, it doesn't happen like that. Another important thing is the markets don't always give a hoot or a crap about what the external news is. Just see how China has already been shoved on the back end, even though there's nothing, no trade negotiation, nothing had really borne fruit, because the market technicals want to go to a certain place. And that's what I show on my charts. And that's where it wants to go. That's where it wants to go. On the lower end, this is where it wants to go. But that crash and burn stuff that I see on stock tweets, and many of you follow, and I always look at, you always have to look at what the others are saying. You can shut yourself out. They're like, oh, that's it. Now we're going to hit 2,900, then we're going to 2,000. Oh, God. All right, guys. You guys are the best, seriously. But you guys got to do a lot more than you're doing. I have to do a lot more than I'm doing. But boy, we are producing some phenomenal results. And like I put out there, the market is not about bulls and bears. It's about information. It's giving you information. We are acting prior to it. And you want real safety? Don't be a trader. Go get a nice lollipop or your favorite ice cream and just sit there. Or buy a REIT and get a fixed 3% on it, 4% on it. You want to be an options trader, make 3, 4, 500% on a small amount of capital? You have to embrace risk within what we keep on showing. That's your daily on the E-minis, and we have futures traders in our midst. And who cares about futures traders? Anybody can use this as a proxy what's going on. Does this really look like we're going to just completely decimate? And believe me, I don't walk away from when the markets are overbought or when they're oversold. I'll tell you, and I'll show you like I do all the time on my service when things are about to crack. Am I going to be right all the time? No. Sometimes I thought things were really going to crack, and I got burned on the small amount of hedges that happened. But you know what they say on Wall Street and in the business? If your small hedges, in other words, your short position in a primary bull market, if your short position actually loses money, that means you're making a lot of money on your long positions. And that has been exactly the case. Have a great evening. We'll see you guys. We have 2 days left, Thursday and Friday. Don't expect a heck of a lot. I think it's going to be somewhat choppy. But I think my levels are going to be reached. But individual stocks, pare down your positions going into the long weekend. That's for sure. Some swing trades, keep it out there. But don't have heavy positions going all the way through. Because generally the first 1 day or 2 days of September, we're going into, what's the first trading day? The first trading day is the 3rd, right? No, sorry, the 4th. 4th, guys? 4th of September. So that's a Tuesday because Monday's a holiday, right? Yes. So the 4th. So we could get a little corrective pullback. It'll show up on the chart, and then we'll have a quick run up on the first part of September. I still think mid-September is going to be a sizable pullback to reset things, and that's when we could very easily see these type of moves. And all it's going to do is a reset, because now that we are at 2,900 and we fall to 2,863, a couple of hundred points, it's going to be like, oh my God, everything's falling apart. Nothing. It could even slip and fall all the way to 2,800 for all I know. And that will set up another huge dragon bullish for the market to move higher. So work with the charts. Try to eliminate the baggage and all that historical legacy garbage that we are all afflicted with, some of you more than me. I actually don't care about baggage anymore. All right? Because I lost more money than all of you put together like years ago. So to me, it doesn't matter. I'm not a crazy bull. I'm very tactically orientated. I just feel that you all need to participate more, need to do things, and stop being so freaking scared all the time. Because the hedge funds are so freaking scared, they're losing money, and they're propping up the market by covering the shorts and being forced to buy. So we do have room to move. And by the time mid-September comes, in my opinion, we're probably going to be in this zone. Mom and pop's going to be super excited, and there's going to be a sizable correction. That's always the way it happens. Just the way it happened, just to show you all before we go, just the way it happened here, January to February. Okay? So we are on wave 5, where we are looking at right now. This was wave 5. We're in wave 5 right now. Okay? And you want to make money while the sun shines. Because once the wave 5 ends, we're going to get a substantial correction. And boom, it's going to be the same old routine. We are in a bull market all the way through 2020. It's a decade thing, okay? Trust me, I don't always flash my Wall Street credentials, but I will tell you, I do know a heck of a lot more than all of you put together, the way money management works. It's a decade thing, 2010, 2020. 2020, we're going to have a nice correction, and then early 2020, 2022, whatever. Hopefully God will allow us to live that long. It's going to be another market rally starting. So this is what we're in right now, guys, okay? Wave 5. Wave 5. Accept it, grasp it, make money, and then pull back. Have a great evening. God bless you all. You guys are great. And please, referrals, follow Instagram, stay involved, and we're in this together. And have a great long weekend, Labor Day weekend. Thank you all.